What's up, everybody? Michael Silva here. The market is setting its sights higher as the 11 sectors that make up the S&P 500. We're in the green, minus energy. Can you take me higher? How high exactly? That's what we're going to talk about in today's Stock Market Brief show. If you're new here, welcome to the show. This is where we navigate the financial markets through the lens of technical and intermarket analysis. If you look at the pinned comment or the description, there'll be links to all kinds of stuff, including to download the chart deck. You can do so for free. And this is a thumb right here, so make sure to hit the thumbs up. There's also information about the swing trading community and my Twitch channel, which I haven't updated the profile, put my schedule together, but we have been going live. Today I spent 6 hours on a live stream throughout the market. Went over so many different charts, answered a lot of questions, and just had some fun. It's a fun, exciting time. So we got an important episode up ahead because this market is pricing in lots of data. So that's what we're going to talk about. Let's get into it. All right, everybody. So today, everything was up, including the VIX, including volatility. What drove the market participation today? Well, we had ourselves a day. This is the day over here. Everything was up in the green, but what took the hit? The dollar was flat on the day. It was up higher to start the day, and the 10-year yield got hit there too as well. And when the 10-year yield falls off and the dollar falls off, what we've seen as far as correlation goes is the markets do typically pretty well. It's typically risk on, and energy and oil, they heavily correlate to the 10-year yield, so they kind of followed that path. The dollar is still holding a defensive posture here for year to date, as it hasn't really taken too much of a pullback, but it has been consolidating, and it's been moving up here with the S&P 500. Now, the market is setting its sights a little bit higher. We had a lot of orders sitting around here at about 49.50, but we had this press higher today, right about at this point where we saw a lot of volume come in. You might be wondering what that was. I was during intraday because I thought the announcement was tomorrow, which it is, but we were talking about the QRA, quarterly refund announcement, and this came in lower than expected. So you can see here, Michael Harnett had mentioned consensus for Q1 QRA on Monday the 29th is very large, $970 billion for Treasury borrowing, so a number well above $1 trillion is needed to dent the risk rally. It's not exactly what happened, but we do have the main headline number coming out tomorrow, 1 hour before the market opens up. So we'll get to dive in a little bit deeper there to see, what this can do to the overall market. Because this was just one of the announcements, not even considered tier 1 data announcement, but yet the market responded quite aggressively with some zero-date option flow, pricing the market through and filling those orders. Now we still have orders down here at around 48.65, and now we're starting to set our sights higher up there at 5,000, where we see a couple split orders equaling to around 500 contracts. Okay, so we'll see how that develops through the course of time. Now, if we continue on, we still have a large week ahead. This is Wednesday, but if we look at the rest of the week, you can look at Thursday, we get ISM numbers. Friday, we get payroll numbers, unemployment numbers, and even on Wednesday, along with what we just previously announced, we also have the Fed interest rate decision. So a lot of stuff, what you want to pay attention to, because it seems like they're going to be holding rates where they are, is you want to look out a month here to March to see if this changes from a coin toss to a for sure rate cut or a for sure rate pause continuation, because even here, it's about a 50% probability that we'll do a 25% basis cut. But over here, we're starting to have more of a coin toss, okay? But not only that, as far as macro data goes, we have a lot of earnings on deck. Today, after the close, we had Super Micro, SMCI, so a semiconductor name that has been getting a lot of attention, reported after the bell, and we'll talk about that momentarily. We have Microsoft, AMD, Alphabet, so Google, right? Starbucks, etc. Down the list after the close come tomorrow. Then on Thursday, we got Apple, Amazon, Meta, okay? And then we're getting some energy names on top of that. So this is a huge earnings week. Now, when we go into the close, right, it's important to look at expected moves to give you determine how much risk the market is pricing in. So when I looked at Supermicro, when we're today here at the closing bell, while we were live, we're going to do the same thing tomorrow if I can stay on that late, which I plan on doing so. But you can take a look here. The expected move was up to around 550. Okay, we came up, we moved, consolidated, and then all of a sudden we got this burst move. And where did we come to? Multiple times tagging that level that the market price in as far as risk goes, putting in some higher lows. So we'll see here if we break through that come tomorrow, or if we come right back down to breathe and consolidate this move a little bit. Now, with all that said, we haven't got much of the macro data or the earnings at all yet, and we've already seen a pretty good start to the week, right? A good start, closing at an all-time high. Now, with this said, going into this week, we had a much larger expected move. This is a plus or minus $71 expected move for the week for the SPX. It's typically around 50 to 60. So the market is telling us right here that the expected move for the week, expect more volatility. If you look at what the price did and has been doing, we've been above a rising 5-day moving average, and we've had multiple occasions here where we try to make lows, but price action is doing what? It's getting tighter and tighter, putting in higher lows right at around an interesting pivot level, and we broke through that level today with some fury, getting above the call wall, which was 4,900, but it has now since changed because the market is setting its sights higher. And that's why Scott Stapp is singing, "Can you take me higher?" Upper daily expected move going into tomorrow is 493 on SPY. Weekly expected move, upper weekly expected move is 494.57. If we take a look at seasonality really quick, posted by the Almanac Trader, take a look here where we are, 2024, right? This is posted a few days ago. We're following the green line pretty well. And it looks like into February, you keep kind of getting to move up. And then February, you start to fade off into March before we get some more rallies. And if you look a little bit closer into the February market performance, you can see here, it kind of flattens out each day, and we'll keep an eye on this as time progresses. I like to look at seasonality to get an idea of what may happen during turning points, but around mid-February, right, you get a little flat out, but to early February, you get a little pop-up, and then potential fade towards the middle of the trading month. Okay, so that'd be something to watch out for. We'll keep an eye on it. If you take a look at the SPY on the daily time frame, something to call out right away is this low volume on this big move. Now, earlier in the trading session, during the live market, we said low volume days, which typically happen like days today because we're going into big reports. And as we go into the big reports, the market's volume typically dries up before we get that data, and then you get a move. And during days like this, you get one, either a lot of chop, or two, you get some participants to jump in and you see heavily manipulated amounts of zero date flow. And what we saw today was some massive flow. Not in market net flow, but in zero dates, saw big change come after the QRA came out and the price action started to rip higher and higher. Now, being that it's in low volume, we're kind of pushing out of this. You want to see the days and how it's going to respond with higher volume. So if we get a big down day on big red volume, that would be considered distribution. So we'll see here as the market's been pricing higher and higher, we had this tight little consolidation and a push, making it seem like the market is setting itself still higher. The RSI, negative divergence in the works. It is building, but it's not actually playing out yet. We'd have to see the RSI turn back down and then the market to start to breathe. And if we start to breathe, let's look at the previous all-time high over here to 479.98. We'll call it 480 for a potential area to watch for possible support. If you look at the BP-SPX chart, I do find this interesting. Many times where we get extended to the 80 marker or even higher, and then price pulls down beneath 70, what we have seen right here, right here, right here, right here, even right here, even right here. You get above 70, and what happens to the price of the S&P 500? Above 70, and then it crosses back below. You typically see the market take a breather, right? That's actually, so 1, 2, 3, 4, 5, 6. 6 out of the last 7 times. Then over here, didn't do it, right? Boom, boom. Oh, did it? I don't know. We'd have to zoom in a little bit. We did see a little bit of a pullback, moved up a little bit, pulled right back into that prior high. So maybe, might consider that, but nothing too crazy that we've previously seen over here in 2022. Okay, well, we crossed beneath the 70, and right now price action is pulling forward, and the percent of stocks within the S&P 500 based off of point and figures, the amount of stocks on buy signals haven't turned up at all. It's below 70. So that's going to be interesting to watch, and maybe that's a divergence that we need to completely continue to pay attention to. If we take a look at equal weight, or XVG, the value line geometric index, versus the S&P 500, this one right here is not confirming a higher move as the S&P 500 continues to move up too, which is telling us that there is weakness still underneath the market. And if this is the case, these divergences have played out to the downside here too as well. So we'd have to see this start to pick back up to kind of disengage this negative divergence that has been building and is still currently building at this current moment. Now, if we take a look at gamma exposure levels, the market is setting its sights up there on the S&P 500 at 5,000. You can see 145 million. That is the next gamma. That's the call wall. So that's where market participants are starting to put their sights on. Above, or just below that, we have 49.50 as local resistance, and local support now is that 4,900. Okay, as you can see, we squeeze through that on the QRA, but we get that actual data come tomorrow. So as it stands right now, we're leaving kind of this, behind, and we're setting our sights obviously higher in the market. If we start pulling back down, start to look at these levels still to hold as a potential area of support. We're above a rising 5-day moving average. We're in positive gamma territory. So this is where dealers look to sell the rip, buy the dip, and you can see some nice moves. Slow grind, low volatility, typically more to the upside. So that is what we will be paying attention to for the remainder of the week. We'll be talking more about this while it's happening live tomorrow, probably the next day. That's all I got for you on today's episode, everybody. See you later.